Okay, good evening, everybody.
Good
Um,
evening, sir.
Before I start, how has trading been so far? This past week, what was it like for you guys?
Today I hit my first good trade. I'm
Today,
not today.
Nothing, no money to
Yesterday.
use trade,
No,
boss.
Friday.
Friday.
Yes.
That's
Gold.
go. That's nice. Was it by yourself?
Bye.
Interesting. Um, so. I think I heard someone else saying something.
Yeah, so now me, no money to use trade, boss,
No money to use trade. Ah,
at all.
Yeah.
uh, I'm thinking of let's. I'm considering running a trading competition. You guys will trade on demo for a while. I don't know. There'll be terms and conditions. Sure. Anybody that wins will probably get like $50 or so to start trading. But
Yes.
Sharp.
Sure.
but let me finalize the plans first before I would drop it on the group.
Okay, sir.
Okay, sir.
So today I want to talk about liquidity, understanding liquidity. Can you guys hear me clearly?
Yes, sir.
And
Yes,
everybody
sir.
can see my
Yeah,
screen, right?
yeah.
Yes,
Yes.
sir.
Okay. So liquidity is basically like liquidity simply means an area in the market where there's like a lot of money sitting. So it's usually an area where buyers tend to place buy orders and sellers tend to place sell orders. So there's always money sitting around those areas. That's what we consider to be liquidity. And there's a way, I don't know, sometimes if you've been trading, you buy you okay, the basic retail trader idea is every retail trader wants to buy at support and sell at resistance, yeah?
Yes.
Okay, Naz, I can see your question. I'll answer your question once I'm done with the class. So I said every retail trader wants to buy at support and sell at resistance. And
Yeah.
the institutions, they know these things, so they like to set traps for traders in the market. They will make you think, oh, this is a good spot to buy, and then they'll take out your stop loss, but you see that the trade will later move in your direction. So if you understanding liquidity will help you avoid situations like that. It will help you be able to spot those traps and know how you can avoid them and know how you can make or place better trades. Are you guys with me?
Yes, sir.
All right. So we have different types of liquidity. We have every swing high and swing low can be used as liquidity. Because I said all those zones, the swing high and swing lows, they are basically support and resistance zones. Are you guys with me?
Yes,
Yes,
sir.
sir.
Okay.
Yes, sir.
So I know I talked about trading sessions too. I don't know if you remember me talking about trading sessions.
Yes. Earlier in the class.
Exactly. So and that form of liquidity is the high and low of previous trading sessions. So sometimes those retail traders would usually take out either the high or the low of the trading session before pushing trade in whatever direction they want to push the trade. Another major liquidity zone is consolidation levels. Maybe I should type these things out. So today we're talking about liquidity. I say we have various types of liquidity. The first one is swing highs and swing lows. I like to believe everybody knows what swing high and swing lows means.
Yeah.
Yes.
No.
No? Did somebody say no? Did somebody say no?
Yes.
You don't know what swing high and swing lows means?
Maybe I know, but like I don't know it as the term or what he said.
Okay.
Maybe I
So I say, were you know in our market structure class? I said this is a swing high. This is a swing low. This is another swing high here. This is another swing low.
Okay, I know. Sorry. See, I know.
So I
Sorry.
said we have various types of liquidity. We have swing highs, we have swing lows. We have the highs or the lows of previous sessions. We also have the highs and lows of the previous day. Then we have consolidation levels too, which could also be support and resistance levels. So can you guys hear me? These are some of the major liquidity zones in the market. Swing highs and swing lows, the high and low of previous trading sessions, the highs and lows of previous day, and consolidation or support and resistance levels. Can you see my screen?
Yes.
Yes, sir.
There was a glitch now. So let me explain how it works basically. So there's a noise in the background. Okay. So let me this particular trade here. You can see this buy trade here.
Yes.
Let me
Yes.
explain the idea behind this trade and how I factored the liquidity into this trade. I think there are about like 3 trades where liquidity was very important before I took those trades.
Please, you guys, mute yourselves, please.
SP7X6E. Please, there's so much noise in your background. So as I was saying, markets broke above this swinger here. This is a low, and markets broke above this previous swing high with very strong impulsive candles, leaving a fair value gap here. This is the 1 hour time frame. We also have an order block around this area. Can you guys hear me? Hello, can you guys hear me? Can anyone hear me? This is my network.
Yes, but we can't see the screen.
You what?
We can't see it.
Yeah, but I can't see your screen anymore.
Okay, I'm sorry, I'm coming. Can you see my screen now?
Yes,
Not
it's already.
Yes, we can see it now.
Yes,
Okay.
can see it now.
So I was saying, I was trying to explain how I took this buy trade, this trade here. Who is that person? Who is that person? As I was saying, Jerry, I was trying to explain how I took this buy trade, and I was explaining that we have a high here. Our market broke above this high impulsively, leaving behind fair value gaps, telling us that we have a lot of buyers in this area. Are you guys with me?
yes.
So that was my first inkling to mark out this zone as a possible buy zone in the future. Then what did the market do? After breaking above high, low, created a new high, created another low. Can you see me? Went up to create
Yes,
another
sir.
new high, then came back down to this previous low, which is equal to this low. I said no. Number one, I said we have different types of liquidity. I said we have swing highs, we have swing lows, and we have support and resistance levels or consolidation levels. So markets created a new low that was equal to this low and came up. It went back up a little bit off of this low. So most retail traders would expect that, oh, this is a strong support level, and once price comes back into it, they'll want to buy again, thinking that price was, you think this is an uptrend, thinking that price will continue to go up. Are you with me?
Yes.
Most retail traders want to buy off of this third zone, expecting price to continue to go up. And what happened? You can see that price came down, broke below this level, and came back all the way to our interest zone. This area of equal lows is what we call liquidity. This low connecting to this low. Are you guys following me?
Yes, sir.
So this is our area of liquidity, because normal retail traders will want to just place a buy from here, set their stop loss below this zone, and target this, maybe this high or this next high. And what happened was that price came, took out their stop loss, came back into this zone, and bought all the way up back. Which means that the analysis was not wrong. The market was obviously going to buy, but market had to seek liquidity first. Had to take out this liquidity here first before going up. Is that clear? Do you guys get that?
Yes.
Is everybody following me?
Yes, sir.
Yes.
Yes, sir.
So sorry. So what's the difference with change of character? Beautiful. Now, sometimes the market mimics liquidity zones, or traders tend to mistake this as change of character, and you might not exactly be able to tell exactly when. Or okay, now there are two major points to factors to consider. Number one, when you see a swing like this is a low, this is a high, this is a retracement. This retracement is not up to 50% of this whole move. Can you guys hear me?
Yes, sir.
This retracement is not up to 50% of this whole move, and it doesn't retest this fair value gap and this breakout block that's triggered this impulsive move upward. You tend to see this zone as an inducement or liquidity zone. So a break of this zone does not necessarily mean a change of character. Please, if there's noise in your background, mute yourself, please. So did you guys get what I just explained?
Yes, sir.
So I said one of the factors you want to consider is, number one, as long as price has not retested this breakout block zone or your fair value gap zone, and the first initial pullback was not up to 50% of that impulsive move, that tells you that this zone is most likely a liquidity zone, and any break below this zone does not signify a change of character. Someone asked me that, how do you differentiate between that and a change of character? That's what I just explained. Did you get that? Tochuku, did you get that?
Sorry, come again, Abeg.
I said one way to identify inducement or liquidity zones is that, number one, the retracement is usually not up to 50% of the impulsive move. I told you when I was explaining market structure, we have two phases of the market. We have the impulsive phase and we have the retest phase. Can you remember that? And I said,
Yes.
an inducement or a liquidity structure, a liquidity low or high, would not fit up to half of that impulsive move. That's one way. You can see price might, let me show you. We have a high, we have a low. Then price goes all the way up here, it does not retest this break of this zone. It comes like not halfway, like quarter way to this point and pushes upward again. This zone is a possible inducement or liquidity zone. Do you get that? Price can easily come back from here, take out this low, tap into this breakout block or the fair value gap that was left behind here, and continue in the upward direction. Did you get that?
Yeah.
So I mentioned two
So
things
we
now.
won't mark this place. We won't mark this place as break of structure.
What place would you mark as break of structure?
Like the second,
This one.
I don't know. Yeah.
Oh yeah, it's not a valid break of structure because this is an inducement zone. Did you get that?
Yeah.
So that's basically what liquidity is. Liquidity areas are zones in the market where traders place their stop loss and the market makers tend to hunt their stop loss. Let me show you guys another example. This particular buy trade here too. This one or up here. How I was able to get that trade was I marked out that zone, this zone way earlier. We had a break of structure here to the upside. Very strong impulsive move. And you see that price continue to go up, showing that there's a lot of money in this area. Are you with me? Are you guys with me?
Yes.
And
Yes, sir.
price failed to retest this zone where the real money makers came into the market, showing us that there's a possibility that once price comes back into this zone in the future, we're going to have buying opportunities. And what did he do? He left. You can see this is a support zone, and that support zone, and that support zone, another support zone. Liquidity. All the way here, liquidity. Most retail traders would think that once price comes into this zone again, I'm buying because it has already touched it first time, second time, third time. They think that it's a good area to buy. Meanwhile, there's liquidity sitting below this zone, and market makers are looking to take out liquidity into where they entered initially before pushing price upward. Do you guys get the concept of liquidity now?
No, can you come again, please?
So I said, I just gave another example. I said this zone here, price broke impulsively upward, leaving fair value gaps in this area, and it failed to retest it before continuing upward, telling us that there's a possibility that once price comes back into this zone, we are going to have buy opportunities. And this retracement on this upward move was not up to 50% of this impulsive move. And price kept bouncing off of this zone, creating liquidity points. Because retail traders want to buy off this zone, back up. Did you get that?
Yeah.
Yes.
So the safest thing to do in this kind of scenario is wait for liquidity to be taken out. Once liquidity is taken out into your zone, your point of interest, and you get a candlestick confirmation, you place your buy and you ride it all the way up. Yeah, someone asked me a question earlier today about I think the name is Naza. The risk to reward ratio. I can't find the question in the Zoom meeting anymore. But let me check our conversation.
He was just asking what's a good risk to reward ratio. It's like 1:2, 1:3, 1:4 or more.
Okay.
Like which one do you recommend?
Yeah. So personally, I recommend the minimum you should always, the minimum risk reward ratio setup you should look out for is 1:3. That way, you would have to take I personally I like 1:5, but it's not every time the market will give you 1:5. That's why I say the minimum is 1:3. If you're using 1:5, if you find 5 trades and you lose 4, let's assume you have 5 trades. Your stop loss on each trade is $5. You lose 4, you've lost $20 out of your account. but you win one, you know your take profit is going to be $25. You'll still be in profit in total, even though you are losing 4 trades. Even though you've lost 4 trades, all you just need to do is win 1 trade for you to be in profit. And with a good strategy, there's no way you should be losing 4 out of 5 trades. So that's why I said if you have 1 to 3, so 1 to 3 is not bad. If you lose 2 and you win 1, in 1 to 3, you still be in profit. But the thing is, you don't always want to wait for your trade to hit your final take profit level. Can you hear me? Can you guys hear me?
Yes, we can
Yes,
hear
sir.
you.
So this is let me show you one particular trade I took. This is actually also under risk management strategy. You guys are not my signal group yet. If not, you have been seeing whenever I call signals, once price moves a little bit in that direction, especially because I always set different. There's always TP1, TP2, TP3, all the way to TP5. You can see this buy. Can you see this buy setup here? Hello, guys. Can you see this buy setup here on my screen?
Yes, sir.
Yes.
So you see that price did not get all the way to my final TP level before reversing back down. And in a scenario like this, what you want to do is once you enter a trade, wherever you enter your trade, once price gives you at least 50 pips in your direction, sometimes it depends on your risk appetite and how much you're risking on that trade. Are you with me? Sometimes you might just want to leave it, let your trades run. But sometimes, especially if you are trading a small account, for small account traders, what you want to do is if you are trading with $10, you can easily, especially when you're trading gold with $10, you can easily wipe out your account. What you want to do is once you place a trade, you get a sniper entry and trade goes in your direction. Instantly, you shift your stop loss to your entry point, which is called breaking even. That way, even if the trade reverses back, it will take you out at your entry point. So you're not losing, you're not making any money. Are you with me?
Yes, sir.
So then if the trade now continues to go in your direction, maybe your for maybe 50 pips was 1:1, then it goes to 100 pips, which is 1:2. You can shift your stop loss from your entry point into profit. That way, even if it reverses and takes you out back, you'll still be in profit. So you don't have to wait for trade to hit your final TP before you throw your stop loss. Do you get? That's one way of securing your account. Because markets will not always hit your final TP, especially if you are looking for 1 to 5. This trade like this is almost 1 to 5. This is 1 to 4.6. This is 1 to 4.6. Yes, that's almost 1 to 5. And we already did 1 to 2.3 before market reversed in our direction, which is good. It's actually good money. Is that clear? Please, what I just explained, is it clear? Do you guys understand?
Yes, sir.
Okay, that's good.
Yes, sir. Yes,
Yes, we do. We do.
yes.
Yes, sir.
So do you guys have any question?
Yes, sir. I have question.
Yeah, what's your question?
Although it's not like with this class right now. So I was thinking, don't call me a rule, but I was thinking that is it possible that somebody is using $1 to trade? It's just a question.
$1.
Yeah.
I've never. I think I've never done that. The most I've ever used, the least I've ever used was like $3, and
Okay, 3.
yes, it's very very stressful. Like
Oh,
number one, it's easy for you to blow your account, and
oh,
I would not advise it actually.
okay. So how about like $5?
Before it's done retesting, before it don't break out, come back, you'd have been gone now.
Exactly. But sometimes you can get sniper entries. Like once you buy, there's almost no drawdown and it goes in your direction.
It
Though-
doesn't
though-
happen always now.
It doesn't happen always, but those are the kind of trades you're looking for with small accounts like that.
Okay.
And small accounts are very frustrating. That's what I'm saying. Because with small accounts, even though your setup will be correct, you have a very good setup, but it should take you out before it goes in your direction because your account is too small. And that way, people say, "Oh, forex is a scam. Forex is this. Forex is that." Meanwhile, people make money from forex. Just like you're trading with a ridiculously small amount of money.
So I
Do you
feel like
get?
what's the like reasonable or not like reasonable, like the best one that you feel like someone can start off with?
To be honest, I've flipped a $10 account before, not just once, several times, but it requires experience. I can't for beginner traders, people that just started trading, I can't advise you to be trying to flip $10. Do you get?
Yes, sir.
For people that just started trading, I would say maybe $50. You can start with $50, you can start with $20. $20 is not even bad. You can start with $20.
Okay, sir.
Okay.
Alright, sir. Thank you, sir.
Okay.
All right. So any other question? Do you guys have any other question?
Okay, see, please can you tap this your long? Let me see the one down. The one down. Yes, yes. No,
This one,
the left one. The left one. The left.
this
The other
one.
one. The other one. The first left. Left long.
This is left. This is the long that is left.
I'm seeing another one. I'm seeing another. Okay. That's the rectangular this thing, abi?
Yes.
Okay. Okay, so I took a trade. Was it yesterday? Yeah.
Okay.
So uh after he now gave me a second higher low.
Okay.
Yeah. After I gave the second higher low, the third higher low, and I got up to like um should I say $100? Yeah.
Mm-hmm.
Then it now retested. Now broke the previous higher low and went down, took me off the market. It hit my SL. Then it
And now
now
we're back in
started going back. Did you hear what I said?
yes, in your direction.
Yes. It now took me off the market. Now went exactly to my direction to like one 75 pips. I'll be 85 pips. So is there a way I could have averted that stuff that happened there?
Well, that like
I
I
feel
just
it's news.
yes, yes.
It's news that affected that stuff that happened there, right?
Yeah, yes, it could have been as a result of the news, but the way you can avoid it is that
Mm.
once if you are very certain of your entry,
I was very certain.
exactly. I just explained trailing stop loss in direction of profit,
Mm.
right?
Mm.
If to avoid that, just leave your stop loss at your entry point. So that way you're no longer going, you're no longer going to be losing money. But you're
Mm.
also risking not making money. And then you wait for the trade to hit your final take profit zone.
Okay.
Do you get? So even if there's a retracement, it doesn't take you out before going back into your zone.
Okay.
But that's not for this one is not for smart. If you are trading $10 and you know that the $10 is your maybe all the money you have for that week, you should your main focus should be safeguarding that account.
Okay.
So because if you focus on understand if you understand market structure, you see basically what you want to be trading with a small account is whenever you see impulsive moves like this setup here now,
Yes.
this setup is
Yeah.
like I can guarantee you is like you have more than 80% win rate with setups like this. Setups like these are usually less risky than other kinds of setups. So you want to be
Well, how
looking.
do you get to predict stuff like this? Like to get this kind of a setup?
I literally just explained it during this class. I said first thing you want to look for is any area in the market where you see an impulsive break of structure telling you that serious money has come into the market. It's not look at not this area. You can see that this blue candles they're not too strong, and there are some black candles beside it. It shows you
Yeah.
that sellers and buyers they are struggling. But here, it just went boom up above the structure.
Yes. Long candle. Long
Exactly,
candlestick.
telling you that buyers are now they've fully taken over this market. Just wait for a retest to that zone. Wherever a breakout with a fair value gap, wait for a retest to that zone and follow it. Follow the direction. These are areas where I like to like place my flip trades on. Like I look for setups I used to flip accounts.
So first of all, you have to wait for. What do you have to wait for again?
An impulsive break of structure, leaving a fair value gap behind.
Okay.
Did you get that?
Yeah, an impulsive break of structure, Abby.
Yes, that leaves behind a fair value gap.
Right.
And for those for I don't know, for you guys that might be interested in flipping, I'm sure people might be interested in flipping. When it comes to flipping,
Yes.
are you with me?
Yes, sir.
See, like look at this trade now. You can see that it did not get to my final take profit, but I still made money from this trade. Why? Because number one, when you're flipping, you're most likely going to be risking all the money in your account. So once let's say you are flipping now, you have $100 account and you open like 30 positions with 0.01. Can you guys hear me?
Yes, sir.
This trade now, you open 30 positions with 0.01. The moment price gives you like let's say even 50 pips is fair. What you want to do is, especially if you know that you don't have $100 to be thrown around like anyhow, $100 means a lot to you. What you want to do is shift your stop loss to your entry. If you can even secure you know what they will call securing partials. Let's say like you open 0.01, 30 positions, and price has gone 50 pips your direction. That means each position already has $5 running. What you can do is you can decide to close 10 of those 30 positions in profits like that. Are you guys with me? Which is
Yeah.
you already have $50 in your pocket. And then if the trader continues to go in your direction, it breaks a new structure impulsively, telling you that okay, buyers are still active in this market. All you just need to do is wait for a retracement and open more positions to follow that trade in that direction. Do you get?
Okay.
So I hope everyone got what I just explained.
Yes.
All right. So do you guys have any other question?
No, I need a couple of things you said earlier.
Sorry, what did you say? Who is that person? I can't hear.
Just a couple of things you said earlier, Chama.
You said you missed a couple of things I said earlier.
I missed the part where you said
You're breaking up, or I can't hear you. You're breaking up.
Sir,
if to your entry, that's where I edged.
what's your best?
Sorry, Pascal, can you come again? I didn't get that. You were breaking up.
You trade derivative pairs. Like what are your best derivative pairs?
Deriv. Oh,
Yeah.
my favorite derivative pair is P75, Volatility 75 indices. That was my introduction to forex trading. That was the first thing I ever started trading. V75 step 100 index.
So do you use the same strategy in currency pair in derivative?
Well, that's the thing there. We need to fix another meeting for that, because when it comes to V75, there are some tricks and tweaks. It's the same strategy, but there are some things you need to take note of that V75 likes doing. So we'll fix another class for that, and I'll explain that to you guys.
Okay, no problem. Thank you, sir.
Yes. So the meeting is recorded, so I'll drop the link. I'll upload the video on YouTube, and I'll drop the link for those that maybe missed a part or didn't join the class. You guys can watch again later.
Okay, thank you.
All right. So
Thank you very much.
when I finalize the whole trading challenge thing, I'll drop it on the group, so you guys will start, and whoever wins will get $50.
Sir, I don't know if it's possible, and if you can make it first three, not just one person you get.
First three.
Maybe first three, yeah. like first, second, third. You get
we'll see. We'll see.
30,
We'll see.
20, 10.
When I finish like drafting the whole thing, how it works, then we'll see how it goes.
I don't know, no issue. Thank you, sir.
Okay, sir.
Okay, sir. Thank you, sir.
Thanks, sir.
Good night, guys. We'll talk later.
Yeah.
Alright, thanks, sir. Thanks for impacting us with your knowledge.